Welcome to another edition of Hours and Minutes, where we take hours of information and condense it into just a few palatable minutes. With me today, I have Brian Seigel. Brian is BUI's Director of Advanced Planning, a former estate and business planning attorney. Brian, today we are talking about life insurance, death benefits, and the income taxation associated with it. So one of the most overlooked benefits of life insurance is that it typically pays income tax free. Typically. So if I own a policy on my own life and I elect my spouse as the beneficiary, typically that's going to pay income tax free. But it may not always be the case with businesses. Can you tell us how a business-owned policy might be different than an individually owned policy with income taxation of the death benefit?
Absolutely. Well, we'll start with a little history lesson. This actually goes back many years when Walmart was taking out insurance policies on the lives of all of its employees. It came to be known as janitor insurance because they were even taking out insurance on the janitors' lives without their knowledge. And so, of course, Walmart faced lots of lawsuits over this. But in addition, the government addressed it by passing in the Pension Protection Act a new Section 101J in the Internal Revenue Code, which has certain requirements in place to, again, get away from that situation of what happened with Walmart.
Yeah, and that's pretty understandable. It seems like people shouldn't have their lives insured unbeknownst to them. So what are the requirements of 101J and how does one remain compliant?
Yeah, so for policies issued after August 17th of 2006, first and foremost, there has to be a notice and consent form on file, which means that the employee has to have been given notice in writing that a policy was going to be taken out on their life. And they also had to consent in writing to that policy being taken out on their life. So that's part one. Part two is there's a separate tax form, Form 8925, that has to be filed with a corporate income tax return each and every year. And people hear the tax form and they automatically wince. But I will say it is the simplest tax form I've ever seen. It simply asks for the total number of employees covered by a life insurance policy, the total death benefit, and the total number of employees with a notice and consent form on file.
So as sort of a summary, when the policy is initiated, at the time of application, there's a notice and consent form that's completed one time, and then on an annual basis with the corporate tax returns, Form 8925 needs to be completed.
That's right.
So starting with the notice and consent, it seems like anybody that's gone through the life insurance process, underwriting process, knows that they've signed an application as the insured, many different times. They, in most cases, have also completed an exam. Is that not enough of a notice and consent, or is there something that needs to go beyond that?
Yeah, you would think that that would be enough of a notice and consent, but for non-owner employees, you have to have the notice and consent form on file. Otherwise, that life insurance death benefit is going to be subject to income tax when it pays out.
And that's a huge consequence. I mean, that a life insurance death benefit being subject to income tax could mean hundreds of thousands of, if not millions of dollars. So that's a pretty big penalty. So what if it wasn't completed? With a policy was taken out in 2017 and that form wasn't completed? Is there anything that business owner can do to remedy the situation?
Well, the first thing I always suggest is to consult with their tax advisor and see if there is any way around the situation. But generally speaking, the only way to truly fix it, to definitively fix it, is to put a new policy in place that does have a notice and consent form on file along with it.
Got it. And you said non-owner employees. So it seems like a lot of business owners, even those who are active in the business, don't view themselves as an employee. So if you have a situation where you have a business owner, let's say an entity purchase buy sell agreement where the entity purchases a policy on the three business owners, do they need to complete the notice and consent form?
Yeah, to err on the side of caution, they absolutely should, because if you look at the requirements, technically, they are also required to have a notice and consent form on file. That said, there is a revenue ruling that is directly on point where the IRS basically said, okay, yeah, you did go through the process of applying for the insurance, you signed as the insured, you have a buy-sell agreement that obligates you to do this, And on top of that, you went through the exam requirements. So your actions are enough that clearly you had notice and you gave consent. Again, that's a revenue ruling that seems to give some relief. I would still err on the side of caution. And if it is an employee, even an owner employee, still have a notice and consent form on file.
Understood. So then Form 8925 you described as among the most simple forms the IRS has created, yet everything I've read about it suggests it's one of the most underreported forms out there. So if a business owner has not been filing Form 8925 with their corporate tax returns, what do they do, and what's the repercussion?
Yeah, and it is the most overlooked form, mainly because the tax preparers usually see insurance as the line item in the books and don't put it together that could actually be life insurance. And so they don't file the 8925. But there's nothing to suggest definitively that failure to file an 8925 with the corporate tax return would make the death benefit subject to income tax. Instead, it may be that there would just be a penalty that would have to be paid for each instance of the failure to file. But again, it comes back to that same thing. Any business owner client should be going to their tax preparer, their tax professional, to get specific guidance on their situation and how to remedy it.
Got it. So it's sort of a recap for the advisors who work with our firm, that the best takeaways are, if they're completing a life insurance policy upfront, that's going to be business owned, to make sure that the notice and consent form is completed and on file, and that they encourage their business owners to remind their tax preparer each year that, the life insurance line item might include life insurance.
Those are the two best steps to take. Absolutely.
Well, great. Well, Brian, thank you again for joining me. If anybody has questions about future questions for Hours and Minutes, please email them to marketing@byusa.com.